The first form I'm going to introduce you to, you've seen it a million times if you're an employee, is the W-2. And at the end of the year, when the year closes, your employer is, according to law, supposed to get you your W-2 in January so you can create a tax return, or you can take it to one of the various places that does tax returns. And so you take your W-2 in and hand it to them. So if you are going to a tax guy and you and your spouse, or you're just getting your own return done, they'll say, do you have your W-2? Now, the W-2 is very interesting because it is a summary of what you did all year with your employer. So if you look at the form in section B, it says employer identification number. That's called an EIN, employer identification number. And that's the number that your employer uses to identify himself with the government. So even though they're going to put an employer's name and address, when the government puts this in, they are going to get the employer name, address, and zip code. So what they do is you have a W-2 and they look to make sure the employer and his ID number has given you your W-2 and has provided them with all of the reports that are supposed to be done for you. Okay, so let's move on. So here's wages, tips, and other compensation. Now you may see that you have wages, tips, and compensation of $50,000. Then you go over here to federal income tax withheld. And that is a number that is your choice. Now, this number right here comes from the form W-4 that you filled out to become an employee. So let's say you fill out your W-4 and you say you're married with two. Married with two, believe it or not, has this enormous chart for the federal government, and it says what you should be paying based on being married with two dependents based on this salary. So let's say you're in the 10% tax bracket based on what you said. You have $50,000 here and $5,000 there. So that's your 10%. Okay, so then here's Social Security wages. That will also say $50,000. And then this number right here is multiplied by 6.2%. That is Social Security. That is what you pay out of your check into Social Security every paycheck. So over here in Social Security tax withheld, it will be 6.2%. Medicare wages. Medicare wages will say $50,000. And over here, you'll multiply 50 times 1.45. Medicare tax is 1.45%. So we have our wages of 50, our federal tax withheld of 5,000 based on being in a 10% tax category. We have Social Security wages, and there's the 6.2% held from the 50,000. Medicare wages, 1.45% held from the 50,000. These two things right here are going toward Social Security and Medicare. What a lot of people don't know is you take that number plus that number, and your employer has to give the same amount of money to the government for tax. So these are considered liabilities to your employer. In other words, if he withholds this from your check and this amount from your check, these three things that are withheld, he has to give them to the government. Not only does he have to give these three things to the government, he has to match this one and match this one, he or she. I use the term he universally, but your employer has to match those, and that's called payroll tax. So when your employer says to you, oh, it costs me money to have you as an employee, when your employer says that, he's talking about having to match your Social Security and match your Medicare. Now, this Social Security tax is supposedly going into an account for you and your Social Security, and this Medicare is going into a fund, a trust fund for you. The other two, the ones that are matched by your employer, they're income to the federal government. So that's why they want everyone to be an employee, because they get 7.65% of the salary you make as income to them. So you get 7.65 withheld, and he has to, or she has to pay 7.65. So the government gets 15.3% minimum on the income you make. So do you see why they want you to be an employee rather than a contractor? Makes total sense. So if you go down here, there's some other things on here. There's a control number. Sometimes they have a control number, and on different softwares, they'll ask for that. Then you have your name, your last name, Mr., Mrs., Ms., not important. Your current address, and that's something I want to tell you. You always need to keep your address current with your employer. If you move in November, make sure you go into the company and say, I have a new address. It's really important. All right. So then you'll see all these different things. You'll see if you have a retirement plan, the W-2 will have it marked, whether it's an employee plan, a retirement plan, a third-party sick pay. They will match that. Other is usually where you pay state disability or other insurance. They might tell you how much they paid for things in 14. 14 is other, but it'll be spelled out. It might say SDI. It'll have different codes in it in this box. Then you come over here and the state in which you live. If you pay no state taxes, there'll be nothing there. But if you're like in California, it'll say California. Your employer will have a state number, like they have a federal number. Here's where the federal number goes. Here's where the state number goes. Here's your state wages. This will 99% of the time match box number 1. So your federal wages and your state wages are the same. And this number is going to be different from federal income tax withheld. State income tax is usually at a lower rate, can be as low as 2.5%, can be as high as 9 or 10, but usually it's much less money. So you'd have your state, the employer ID number, your state wages, which will match number 1, box number 1 and 16 would match. Number 17, if you live in a state where there is no income tax, you won't have anything in there. And sometimes this local wages is where they put your state disability, but normally it's in box 14. So looking at this, you can see that this is a summary of your year. Your wages, your federal income tax withheld, your Social Security withheld, your Medicare withheld, if you were in a retirement plan, what your state wages are, and the state income tax you paid, and here if you paid into the disability for your state. I think Arizona does not have a state disability plan. My friend lives in Arizona, and I believe she does not pay into state disability. So if she is out of work, she cannot apply for state disability because there isn't any. All right, so your W-2 is going to tell the government what you made and is going to help you prepare your taxes. Now, here's what the government really wants. They want for your wages and your federal income tax to be so precise that they neither owe you money at the end of the year and you don't have to pay any money. They are hoping that you have done all your calculations and that your calculations make this number come out almost perfectly and this state income tax come out almost perfectly, so nobody owes anything and nobody is owed anything. That's what they're looking for. So there are tax calculators and there's all kinds of things that go into what you should withhold. We're going to go over that. I think I actually will have a segment on that, and I think we're going to go over how you can get close. Also, if you say, why is box 1 different than box 3 and 5? Normally, they're all the same. I'm going to explain that. If you are in a 401k program, your 401k money gets removed before you get federal tax charged. Not on Social Security, not on Medicare, but your federal and state wages, if you're in a 401k plan, they do not tax you until after the 401k money has been deducted from your gross salary. So that's why this number might be different. Also, if you're in one of the brackets over, I think 128,000 now. Once you've hit 128,000 or so in Social Security wages, they stop taking 6.2% out. So if, let's say you made 150,000 here, this will stop at 128. Medicare, on the other hand, you pay Medicare 1.45 if you make $3 million. So this could be different from this box and this box if you're in a 401k plan, and this can be different if you've hit the Social Security wages ceiling, and therefore they stop taking it out. So it will be this number times 6.2%. This number could be, like I said, 3 million, and you'll still have 1.45% taken out of that 3 million, and your federal income tax withheld is based on this wage. And like I said, if you have a 401k that is deducted, or sometimes medical plans, they used to be called Section 125 plan or a cafeteria plan, where if your medical insurance, if you're paying for your medical insurance out of your paycheck, they will deduct the medical insurance and they will put in, let's say your medical insurance is $300 a month, which would be wonderful if it was. And so that would be $3,600. This category would be 50,000 minus the 3,600. So it would be 46,400, 46,400, and this would still say 50. So there's a lot that goes into that, and I can get more detailed later when you're filling out your W-4, but you need to understand this whole form and understand when you give it to your tax guy, he is going to create a tax return from this information. So if you and your spouse both get W-2s and that's all you have, then you're going to give both W-2s to the guy. He's going to combine them together, and on the front page of your 1040, you're going to see all of this spelled out. So I think that's enough for the W-2 today. You should know now basically what you're looking at and why. And it's all in the quest to not say, I don't know. You now know what your W-2 stands for, and I'm really glad that we had this conversation. Thank you.